Yeah, I believe in you. I don't believe in lucky sevens. I'm not sure about Loch Ness, but I know I believe in angels. I believe in happiness. Hello, and good evening, Justin. You're already connected with us. It's great to see you. All right, everybody, we have a great show. Let's bring up JC Schweingrouber of Vista Front Partners.
Hello.
A great show. Oh my gosh, hold on. They've given me so many more options. Like I can put you all over the screen now.
Oh, wow.
But now we're side to side. You're a fantastic co-host for the news. You know that?
Oh, thank you. I appreciate it. Sorry I haven't been around in a while. It's been a month, so apologies.
That's okay. I mean, you've been sick. I've been sick. It was my birthday, and it turned into my birthday week. And then Mother's Day, so it turned into my birthday 2 weeks. And then it was the dog's birthday, so we kind of celebrated together. So it's been a whole half a month, and my whole family's like, will you stop it already?
Just make a month of it. Come on, it's your birthday. How many months do you get? One a year. Come on.
Right.
I mean,
exactly.
A lot of other people get their own month. You should have one too. Come on.
Oh, well, thank you so much. But yeah, we've both been sick with this hacking cough and stuff. I hope anybody else out there who's had it, I hope that you're recovering and doing well. I have cough drops for, right here at the ready. And but you're feeling good. You're back working?
Yeah. I would have done news sooner, but I sounded like I was going through puberty. I lost my voice. I couldn't stop coughing, and then every time I would try to talk, I would just go into this break out of this coughing spell, and it pissed me off. Let's put it that way. So whatever I had was not pretty. I probably first week I laid in bed. I never really miss work. I mean, I'm always paying attention to the market. It's like usually I work and do make contacts and do things we do with the company, but it's like I laid in bed, like I didn't do much, and anyway, lost about 15 pounds during the time I was sick, probably. But anyway, here I am, and I'm still coughing a little bit, and my voice is still a little raspy, but hey, I don't give a crap. All right, I'm alive. It's we're gonna rock and roll anyway, right?
Exactly. And I got to ask you this question that I just put up on the screen. So anybody who's watching, please let us know. What kind of a sick person are you? Are you a good sick person? Are you a needy sick person?
What kind are you?
I don't rest. So if I'm hungry, I get up and I make something. And I appreciate that the kids come in and they check on me, and it's more of like a panic, like, oh, we're not getting laundry this week. We don't have dinner tonight. Those types of things. But they're still very sweet. They come in and check on me. But I've noticed with the different kids, like some kids are very self-sufficient, like me when they're sick. If they need a blanket, they'll go get it if they can. This, that, and the other. And then others, like they want me to give them that bell and just sit there. Can I have a tissue? Like, no, the box is right there. Just get it.
Oh my God, that's funny.
No, you alone with your dog, right?
I'm sorry.
You live alone, so you've got to be very self-sufficient.
I'm self-sufficient. Like if I'm sick, I'll just crawl in the corner. I'll come out when I feel better. I don't like being babied, I'll survive. But I did, like I was telling you in the green room, like I realized I didn't know how weak I was. So I went to the grocery one day and I was so out of breath, I had to stop in an aisle because I had not been eating. Oh. Like I had lost my appetite. I was like, holy crap. So at that point, I'm like, all right, listen, fat boy, go home, make a sandwich, go get some frozen vegetables, have some broccoli with cheese, something. And so anyway, it's, I get through it. Like I'm pretty self-sufficient, and I'm always but I had people checking on me constantly, like calling constantly and like, texting, hey, you okay? And all. So that was nice. But, but yeah, I don't know. I wasn't down for the count. I kicked out at the 2 count. I'm good.
That's awesome. Well, I'm glad that you're back and you're better. Do you ever do any games or of course you probably read some books, but crossword puzzles, anything like that while you're just resting at home?
Yeah, I did a lot of like word search. There's a trivia game on Netflix that I got hooked on called Triviaverse. If you haven't played this, it's either one or two player, and it's interactive, and like you have to break different levels of scores. So I'm like, okay, let's try this. And then now I can't stop playing it, and I'm pissed off because I can't get past a certain level now. And it, like you get three sections of questions to break a certain score, and you have
Mhm.
a time, so you can't just sit there and read and think. And but it's fun. I did a lot of that.
Well, I have a game with me. I was wondering if you wanted to play.
Yeah.
Uh, it is trivia from the 2010s. So I'm going to type this in here. Trivia time 2010. So everybody watching, you can play along with us in the chat section and pop in your answers. So first question, ironically, is about the Royals in London. Did you watch any of the coronation?
No, not maybe a little bit, but I just as I flip through channels, but I
Yeah,
really not my thing.
I didn't either. And I was talking to some family members who they follow it. We're not really all that English, to be honest with you. So it's not like a heritage thing or anything, but just the whole thing is just fascinating to see their etiquette and way of life and all these things that have been kept in the family, I guess. So my mother called and she's like, "Oh, are you watching the coronation?" I'm like, "Mom, no, nobody wants to see this. Like, this is what." I don't know. I'm not a Charles fan, and he's got his side chick in there, his queen. Like, what the heck is that? I'd rather see William and Kate. I think if it was William and Kate, if he had passed it on to his son, which I think should have happened, because
He's
you know,
old.
yeah, Charles is too old. Like, I think they want to see the younger generation, just like Elizabeth was. She was the younger
Yeah,
generation.
yeah. She was very young when she took what in her 20s, right?
Yeah, yeah. I mean, young, newlywed mother, um, very young lady. So, I think if it was William and Kate, it would have been like gigantically huge.
Everyone would have watched. Yeah.
Everyone. But Queen Camilla? No. I don't know. Maybe I'm offending some Brits out there, and if I am, I'm so sorry. But that's just my question. It's my thoughts here. So here's the question:
Hmm.
what month did the royal wedding of William and Kate take place? And we have A May, B June, C April, D August.
I'm gonna say June.
Answer is C April.
Oh, okay.
I know, but you would think June bride, right?
I would. Yeah, it's the first thing I thought. June weddings.
All right. Next one is, what political figure does not appear in the musical Hamilton? A. George Washington, B. John Adams, C. James Madison, or D. Thomas Jefferson?
George Washington.
All right, let's see. B. John Adams. And
Okay.
Justin got the last one right. He guessed April. He guessed April for the wedding of, yeah, let's see. He said B. John Adams. Man, you're good at trivia, Justin. All
Get
right.
him on the show.
All right, let's do this again. I got to cover up the answer here. Hold on. All right. So this one says, who has appeared in the most Marvel Cinematic Universe movies? A. Robert Downey Jr., B. Scarlett Johansson, C. Chris Evans, or D. Gwyneth Paltrow?
Hey, Robert Downey. Iron Man's been almost all of them, hasn't he?
Have you seen all the movies?
I've watched a couple. That's all. I never really got into them.
I haven't
Now the
seen.
ones I watched, I liked, but just it's a lot of them.
All right, let's see. Justin is saying B. He's guessing Scarlett Johansson. Which one did you say?
Uh, Iron Man, A. Robert Downey.
A. Robert Downey. It is C. Chris Evans. C.
Okay, was he
All
cast?
right. Okay, let's see. So I'm gonna cover the bottom corner. You want to read that one for me?
I can't read it from here.
Can't read
Actually,
it. Okay. All right. So let's go over it together. Which NBA player won the most regular seasons MVP award in the 2010s? A. James Harden, B. LeBron James, C. Kevin Durant, or D. Stephen Curry? Do you follow basketball?
Yes, some. My nephew's big into it. My nephew Ryan is. I would say, I mean, the easy answer, like you want to say LeBron James, but so that's kind of the easy answer. But he was on a couple All-Star teams. I would say Curry, D.
I'm going to say C. Let's see. Justin says A, James Harden. Let's see which one's. It's B, LeBron James. All right, you want to do one more?
Yeah, we should have known. Of course, I'm batting 0 for these, but that's
All right,
great.
let's see. I'm going to pick one here. All right, let's see. So this one, which rap star was resurrected as a hologram at Coachella in 2012? A, the Notorious B.I.G., B, Tupac Shakur, C, Nipsey Hussle, or D, Jam Master Jay? I'm personally going to say it's B.
Tupac?
Mm,
I'll say Biggie.
okay.
Um,
Have you ever been to Coachella?
no.
You know how silly this is? So I was in California. I had a friend of mine. Justin says B. That's what I was waiting on. So he says Tupac Shakur as well. And I was offered tickets to go to Coachella, and I'm like, oh, what's that? So I didn't go. I didn't even know what it was. And now
I
I'm like,
went to it like a couple of years ago. I just found out myself.
yeah,
So.
it's Tupac Shakur was the answer on that. All right, well, that was fun. Maybe we'll do a little bit at the end.
I know nothing about the 2010s. How did that happen? I was alive.
We're there. We are old enough to remember them freshly.
Yeah. Now, I trivia when I was like 10, and I'd like bang them out. I don't get that.
Right. So all right, let's talk about some financial stuff because I know that you're with Vista Front Partners. Tell us a little bit up front about what Vista Front Partners is, and then let's get into the conversation of what in the world is happening.
What's going on? We always have that question. What's going on in the market? It's like, rain and blood, cloth. It's revelation.
Right.
No, Vista Front Partners, we're an investment advisor company. So basically what we do is investors will come to us. We will discuss what their long-term needs are, what their long-term goals and aspirations are, learn a little bit about their investment history, what they're comfortable with as far as risk and versus no risk. And we will manage their money for them for a percentage of whatever the assets are under management. So we have an vested interest to see your money grow over time because, if we charge a flat percentage, then, the higher your value is, the better we do. If it drops, then we don't make as much. So it's kind of a nice arrangement with our clients. But we're the kind of a full service group that investment advisor. We take our clients through Charles Schwab as the custodian. So we have a lot of advantages going through a company like that with research and things like that. And it's a business that I've been in since the late '90s when I first got started with Edward Jones, right out of grad school. And when I was in high school, I was sort of a stock junkie. I just fell in love with that ticker tape. And the more I learned, I'm like, wow, this is interesting stuff. So that led me to study economics in college and grad school. And then when I got out, I applied for a lot of different jobs, I guess, in the world of being an economist. But eventually I just came back and looked at, hey, let's get in. Even though I'm a horrible salesman, I got back into the business of sales with brokerage and have not looked back ever since. So just a business that I love doing. Stressful as all hell, but I wouldn't change anything because it's just, you work your passion, you feel like you never work a day in your life, so to speak. So, and I am one of the rare few fortunate people that feel that way.
Oh, that's wonderful. It is such a blessing to be able to do something that does not feel like a chore, that you don't wake up going, "Oh man, I got to go to work today." That's really very rare and not a lot of people get to experience that.
And and on top of that, I get to, I've always been a very I guess what would you call a person, charitable person. But I
Mhm.
love the fact that what I do, I get to help people reach their goals because a lot of people say, hey, you're just helping people with investments, and that's just money and that's just stocks or mutual funds or bonds or whatever. I don't just I look at it a little different light. I help people be comfortable as they try to work and save for retirement because they have a goal and a vision and a dream, and I want to help them get to that. So so I don't. I help people work toward their end goals, their visions. Whether it's putting their kid through college, saving for retirement, putting money down in your early 20s to buy your first home,
Mhm.
anything at all like that, or just something to supplement retirement. You have a 401k, but you want a Roth, or maybe older people who just need income. They have a certain amount of money and they need income, whether it's from bonds or preferred stocks or dividends from, stock, just basics, regular stocks. Um, so helping people have money to keep the lights on without tapping into too much of their 401k or drawing down too much. If they have a portfolio that pays dividends and they can take a vacation off of it every year. That's
Right.
awesome. Yeah, I love being able to help people achieve a goal, find a goal, because it's not about necessarily. I don't look at it as the money per se. But it's like, what's our end game? What's our goal? You have goals, hopes, dreams, and visions. Let's get you there. So
Mhm.
let's work on that, so people can focus on that and enjoy that instead of, oh my God, the market's crazy and my 401k is nuts and this, that, and the other. Relax. I hate to sound like who was Aaron Rodgers when he was the Packers. Just relax. RELA. But no, but it's part of my job to help people, achieve those hopes, goals and dreams, and keep those things in mind so they don't worry so much about the dollars and cents of everything.
That brings me to a question before we get into the market. And we're going to be talking about the market, what's going on, the debt ceiling, what does that mean? All those types of things. And I love how you take your time and you explain these things so that anybody can understand it. You don't have to have a financial mind or, be someone who knows a little bit about this or a little bit or a lot about this or that. So
Yeah,
thank you for that. But the older generation, that maybe 6, 7, 8 years ago they retired, are you seeing any of your older clients coming back and trying to rework how exactly they're working out their retirement and when they're pulling out cash? Or have you
yeah,
seen any changes in that stream?
yeah. I mean, pre-COVID, the market was doing, every year pretty well. I mean, you have a down year here and there, but the market's done well for a long time while the Federal Reserve held rates at nearly zero. So you had a lot of older folks who need income, stability, safety that would normally look at bonds.
Mhm.
Well, even if you go to government bonds, they weren't really making hardly anything. So they had to look elsewhere. So now that rates have come back up, we're looking at 5 to 5.25 on the Fed funds rate. So every other person out there that issues debt, whether it's corporations that issue bonds, the government agencies, all these folks that issue bonds now have to issue them at higher coupon rates
Mm.
to compete, right? With rates that are out there. So corporations, they don't really like it because they have to pay higher on their debt, right?
Mm. Mhm.
Well, sorry about your luck. Retirees, for the first time in 25 years, are breathing a sigh of relief because they can shift their portfolios from, they may have had a lot of stocks
Mhm.
that may be like value stocks that we talk a lot about on the show that pay good dividends. And now they can say, okay, I can take risk off the table because markets go up and down. Because I'm, 75, I'm not comfortable with that risk. So now bonds are doing well. I can go out and buy 2-year, 5-year, and 10-year bonds. And I can mix in some corporate bonds or maybe some government agency bonds and finally get coupon rates that are paying you from 5 to 6%.
Hmm.
And if you wanted to go down the scale on, say, corporate bonds, you have your highly rated AAAs, but then you can go down that S&P ranking or Moody's ranking and go down to some a little still investment grade, but companies may not have the greatest financial balance sheets and income statements, but they
Mhm.
may have like triple B rating, which is still a good rating, and maybe get a 7% or 6.5%. And that's great. And they're loving it. So they can actually, instead of having that, they can go back to more of a traditional 60-40 portfolio, 60% equities, 40% bonds, which was what they would have been comfortable with prior to all the years of having like zero interest rates. So older clients have benefited from this. Retirees that had money that maybe hopefully didn't lose a lot of it in the market during the big COVID downturn, and when the world shut down. But then when it opened, it just like skyrocketed right back up. But they've been able to take a lot of risk off the table, which is good for them.
Yeah.
Yeah.
Yeah, that's definitely good for them. So, we have seen an uptick in the bonds and the percentage of what you can earn on a bond.
Mhm.
And now in the news cycle, it's recession, recession. It's either here, it's coming, it's here, it's coming. And all this other chatter that's going on. Can you help us decipher between what's going on in the market, which today it closed a bit low, and the debt ceiling situation and the value of the dollar?
Well, those are that's a great question. Very,
And go.
like puzzle one, puzzle two, puzzle three, But so let's sort of put this back in let's make all the confusion, all the talking heads on TV, just forget what they've said for a minute, and let's look at Main Street and go common sense. Um, one of the things, as far as it's been in the news, earnings overall this quarter from all companies in general, especially the multinationals that do a lot of business overseas too, they've come in okay so far this quarter. But one of the things I've noticed a lot of them doing, some are giving their forward guidance to look okay the rest of the year. There are quite a few companies that are actually downgrading the prospects of business for the rest of the year. And one of the biggest ones that everybody pays attention to came out today. Now, the market was down roughly about 300 points today. Well, 100 points of that on the Dow Jones was because of Home Depot, just Home Depot. So that tells you, like, the Dow Jones, that's only a basket of 30 stocks. So, and they're pretty well diversified. And I tend to look at the S&P 500 as a more broader gauge of the market. So that's an index I follow, probably a little bit more than the Dow, but the Dow gets all the press, right? Because it's all the big companies. So today, Home Depot, they released their earnings, and they barely beat on earnings per share, or how much money they make per share that they have traded on the market. They barely beat it by 2 cents, but that's a beat. But when you look at something as simple as earnings per share, when you're watching the news and you hear that, and you think, hey, they beat their earnings, great. Well, there's a lot of ways a company can beat their earnings. It doesn't mean it's because they're growing their business. They can go cut every cost under the sun to get in under that to beat their earnings, to make sure they have earnings for the company per share. What happened with Home Depot? Yes, they barely beat on earnings per share. That was a beat by 2 cents. But boy, they missed big on revenues. So that's the other side of the coin when you hear of a company releasing their earnings reports, per se.
Mm-hmm.
Not only did they miss on their revenue, which is you're looking at quarter by quarter, year over year, same store sales. They lowered their guidance significantly for the rest of the year. This is Home Depot. This is a bellwether company that you and I and everybody else under the sun go to, or companies like them. So that's a problem. They said one of the reasons that they missed, and it was a pretty big miss. Okay, it wasn't like they just barely missed by a penny or two. No, it was a pretty good miss. They said inflation was some of the problem. So, and I can get that. I understand that. I'm going to talk to you a little bit. Another common sense number that came out, we're going to talk a little bit about that you can kind of put 2 and 2 together as far as your puzzle and these pieces. It'll kind of put them a little bit more in light and kind of give you an idea of like what to pay attention to with the talking heads on TV.
But I have a question though before we get into that. With Home Depot, so they came in short on their revenue, meaning that people are not buying quite as much. Man, is that reflective on this recession of people just not wanting to spend the money or don't have money to spend?
You're on the right track thinking that, okay?
Mm-hmm.
So hold on to that question. We're going to get to that. You're thinking the right way, because what I want you to do is, like, as I'm walking through this scenario, I want people to think of, all right, common sense. What am I doing in my world?
Mm-hmm.
Because you're not Wall Street, I'm not Wall Street. We're Main Street. Main Street is the real economy. Wall Street can fudge their numbers however they want to. That's a different, it's a bit of a different world. So common sense tells you, hey, wait a minute, they're not making as much money because either the consumers are not shopping as much or their own inflation costs come in and they've had to bite the bullet. Probably a little of both. They said inflation was some of the problem. I'll give you another problem. Remember how a couple of years ago we were talking about how the price of lumber was so high?
Mm-hmm.
Well, now it dropped a ton, right? So now you have rock bottom prices on lumber. Well, what does Home Depot sell a lot of? Lumber. They're not getting the revenue from that they used to. So that was part of the problem as well. That and people are not buying as much of it. So, but the consumer, according to them, is starting to show signs of weakness. Now, if you watch CNBC or Fox Business or whatever, Bloomberg, whatever, you hear talking heads saying, well, the consumer seems to be in great shape. They're still spending money. Okay, now hold on to that thought. And Jim Cramer says a lot of interesting things on that show of his. So hold on to that thought. Home Depot is a big tell about the general economy. And people have recession jitters. Well, that's very founded, in my opinion. One of the other things that comes, the other number I wanted to kind of part of this puzzle that you posed to me there is consumer debt numbers. Now, if you look at the consumer debt numbers, it's been rising. We all know that consumer debt has been rising, especially post-COVID. Mm-hmm. Consumer debt just passed 17 trillion with a T for the first time ever. Okay, now that is nearly $3 trillion higher from the pre-COVID period that ended in 2019. So you couple that with new mortgages and refis are at the lowest level since early 2014, which is reflective of, I've read somewhere is a little over 320 billion in value, right? Mm-hmm. From that time period, so that's a big difference. So it's the lowest levels, right? So that's kind of scary because if you see they say the consumer is in great shape, but debt is going up. The problem is, like, common sense, when you think about that and see what happens at Home Depot. And again, when I mention companies on here, folks, I want you to understand I'm not making a recommendation of a buy or sell. So let me get my compliance thing out there real quick so I don't get in trouble. I'm not making any recommendations of buys or sells. I'm just talking about general news that may be out there. And I'm not predicting what happens to other companies. But there are other companies that are similar to Lowe's or like Home Depot, like Lowe's. And then you see it's probably not a good sign for other big box retailers like Target, for example. What happened to Home Depot? Now, we'll have to wait till next week to see what Target says. I don't know what they're going to say. No whisper numbers out there. But when you look at the fact that people refis are at the lowest level now because rates have gone up, homes are not selling like they were. Consumer debt is rising. And you have talking heads saying, hey, the consumer's okay. They're still spending money. Well, where are they spending money? They're raising their debt. Credit card debt is going up. People have taken distributions from 401ks are going up, or loans from these types of things, or early withdrawals from other accounts, or actually selling out accounts in their brokerage and taking cash out of those. So, or their own savings accounts are dwindling. So you're not like before when COVID happened and all that money at stimulus went out. You saw all those savings rising. Well, now they're dropping like a rock. And now consumer debt is going up. So you tell me, common sense with what you see at Home Depot and what they're saying for the rest of the year, consumer debt numbers, and the fact of what we're seeing in the housing market. Mm-hmm. Is the consumer okay right now? Are they doing fine? Probably not.
Probably not. I was just on Forbes. And they do have some interesting little key facts here listed on Forbes.com. So one that really caught my eye was credit card debt has been climbing for close to 2 years following a decrease during the pandemic, right? So that's shadowing what you just said. After falling 13% in 2020, debt spiked 9% in 2021, almost 18% in 2022, a record growth rate according to the Fed data. And as said, consumer credit hit a record high of 4.82 trillion in February.
That's huge.
So were people feeling, the money was coming in because we were supplemented by the government. So have people then acquired homes that cost more, or why the need for all the credit in the following years?
That's probably a small part of it, but I think one of the things in the following years, people were stuck at home for so long.
Okay.
If you look at the numbers that are climbing right now, that people are spending more money on, food and entertainment. People are still like clamoring to get out, and you can't blame them. But part of the problem is all that stupid stimulus they put out there that they didn't need to, that even economists from Obama's administration warned them about doing, and they did anyway.
Mhm.
That sparked a lot of this. There's a lot of causes of inflation. I'm just going to blame it on one. Like our massive debt is another reason we have such inflation. It's hard to corral inflation when the government's spending like crazy, and both sides do that. But if you look at what people were doing, inflation is sticky in certain areas still, even though it's been coming down month over month over month for months now, which is great, right? I mean, it's on a trajectory to get back to where it needs to be. Parts of inflation will be sticky for a while. And the longer the Fed keeps the rates higher, then it'll take a time to go down. It just doesn't disappear overnight. And people are still wanting to spend, so they're just taking money out of other areas to spend. Doesn't mean that the consumer is healthy. They're still spending in some places, but they're spending with money they're going to end up paying 10% back on interest on credit cards or whatever else, whatever loans they have, or dwindling down their savings. So that tells me that the consumer, yes, still spending, but the consumer isn't really all that healthy. And when you have a company like Home Depot that gives significant downward guidance for the next 2 quarters, that tells me that if the recession if it's not here, we're right at the doorstep of it. Yeah, I don't know if it's going to be a soft landing like a lot of people hope, or whatever, but regardless, consumers are going to have to clamp down on their spending, and you're starting to see that in some areas already. Changes in the way they shop versus before. Like some retailers are doing good, right? But it's when you start seeing more and more people shopping at dollar stores, that's a sign.
Definitely. And people have been shopping at the dollar store and, the deeper discount, not just
Yeah,
Walmart,
yeah,
but
not just
go deeper. You had mentioned 10% on credit cards. I can't remember when it was 10% on credit cards, so I just did a quick search. So average APR for all new credit card offers as of April 2023, 23.84%.
yeah. And it can go up 30 or 32, can it? Like,
Yeah, man, that's crazy.
right, it's insane. But that's what's going on right now, because people are maybe the last gasp of the before consumers tighten down, and Home Depot sort of sees it coming. So that's one reason why I don't just look at the numbers and read the article. I like to go and look at maybe if I can find an audio somewhere of the conference call when the analysts can ask questions and things like that too. And you can get a real sense of what a CEO is thinking. Another thing that a lot of folks, even on Yahoo or whatever, if you're just looking at a particular stock and you want to think, there's always a little link you'll find there for insiders. Click on that. That tells you what the officers of the company are doing with that stock. Are they buying it and selling it? Because every time they do, they have to report it. Has to be made public. So if you see a company where, hey, what had the CEO just sold 2 million shares of his own company? I wonder why. Now it could be because maybe they they have to diversify too. They can't have all their eggs in one basket. I don't blame them. And a lot of times they'll sell that or their stock options for cash or whatever, for whatever reason. Totally get it. But when like 10 of them are lined up selling, it's like, what are wonder what they know. So that's one little trick you can do when you're researching a company, to just try to find out what the insiders are doing, what they think of their own stock. If they're buying, hey, they got to be confident, right?
Mm-hmm. Absolutely.
That gets, because when I research a company stock, and And then this is a little rule of thumb for everybody. When you're researching a company and you think, hey, do I want to buy this company? You can always do pros and cons. But when I approach research for a company, I try to find a reason not to buy it. That's the first thing I'm thinking. Why would I not buy this company? And then if I come up with reasons like, well, maybe I should buy it. And then the more clear it becomes, whether it's, and let me categorize that. Like, some companies are good bellwether companies that pay dividends. We talk about those a lot. Love those companies. But if I'm looking at something that's a speculative company, I know it carries a lot of risk. Could go either way. But I always kind of approach that the same way too. But if it's somebody who wants to have, maybe 5% of their portfolio and that special kind of risk, I'm really willing to risk it, roll the dice a little bit, so to speak. And I'll look at those companies. Okay, what are the prospects of the future? And why would I not buy this versus why would I buy this? So always, it's your money, so you want to be careful with it, and you want your advisors to be careful with it too. So sort of look for that approach. Why would you don't go out to the store to buy just any old shirt? You look at something, you find a reason why I'm not going to buy that one, but then you find reasons why the one on the next rack you're going to buy.
Sure.
So be just be cautious, things like that.
So, can you help us understand, for anybody who is not clued into this, what the debt ceiling is? I have the definition, according to treasury.gov, for the debt limit. Debt limit is the total amount of money that the United States government is authorized to borrow to meet its existing legal obligations, including Social Security and Medicare benefits, military salaries, interest on the national debt, tax refunds, and other payments. Now, what is this debt ceiling?
It's the same thing. It's a number that Congress gives the government the ability to spend up to. So, if the government has spent up to that limit, which Janet Yellen says is going to happen in June, at that point, the government has to make some tough decisions. They have to sit down like everybody else at the table all of a sudden, instead of voting for things that just happen automatically. They have to sit down with a pen and paper and say, all right, here's how much revenue we have coming in. Here's our bills. What are we going to pay? And of course, the first thing you're going to pay is interest on the national debt. You're not going to let that default. They came so close to that back in 2011. And I don't think a lot of people really appreciate that at that time. Our treasuries, right? AAA rated, the safest investment on the planet, got downgraded by S&P and Moody's from AAA to AA. So all of a sudden, we're no better than a Walmart bond with insurance. All right. So that's what Moody's said, because the federal government was willing to take that much of a risk. Our politicians, let's not say the government, our politicians were stupid enough to take that kind of a risk. They have never let anything default, and they went right to a brink. But if they don't make an agreement, it doesn't mean we're not paying our debt. We're going to pay our debt. The government has money coming in every single day. A lot of people don't realize that. It's not just in April when you send your taxes in. Every time you get a paycheck, they're withholding. So people get paychecks every day in this country. Every time you go to the gas station and you fill up, 50 cents of that goes to the federal government on every gallon. On every gallon.
Sure.
So
for people wondering, okay, what exactly is going to happen? Or maybe younger people that haven't seen it in the past, of what happens when we get to this point.
Well, when we get to that point, that's exactly what the politicians have to do. They have to sit down, the Treasury Department, the president, and the leaders of both houses of Congress. They have to sit down and say, all right, what bills are we going to pay if they haven't come to an agreement? Now, there are bills that are obligations that have to be paid first. Politicians love to scare the piss out of everyone every time we come to this. The military's not getting paid. You're not getting your Social Security payments. False. That's a lie every single time. They know it. It is a political ploy. It is something to whip up people into a frenzy to create fear. They do that every single time to make the other party look bad. That's all it is. Just to make whoever they think is at fault look bad. But what's likely to happen, just a little while ago before the show, there was a meeting at the White House, and it was President Biden, and then, of course, McCarthy and McConnell. And then, of course, you have the Democrat leadership, too. And they all met at the White House and had a discussion about this. They actually came to an agreement that they would not let it default. They were going to come to an agreement before June, maybe by the end of next week even, and it was going to be a bipartisan type bill. That they knew that anything partisan was just stupid; it wouldn't pass. So Biden had to concede, like, I'm not going to hold this hard line like I've been holding. So he just wanted a clean debt limit raise and then spend on whatever you want. Well, there are others who say, okay, McCarthy actually had a pretty good plan, which I think was incredibly reasonable. He wanted to hold spending levels for 2023 at the 2022 level. That makes sense.
Okay.
Why spend more than you have? I mean, we already spent a ton last year. Okay. We're just saying we're not going to spend any more than we did last year. Last year's increase was by like 7%, which was insane. So, I mean, you're just saying, hey, we're just going to hold that line. But then that wasn't good enough. They wanted more. So, but he just said, hey, we're going to do that, and we're going to limit raises to 1% in other departments, or like funding in certain things to 1%, and everything would get funded, and the debt ceiling limit would be raised. And but that's why they play politics with this all the time. My estimation is it will probably there'll be a deal last minute, 11th hour, and then the markets will sigh, a big sigh of relief. Jamie Dimon, on the other hand, the guy who's CEO of JP Morgan, he's been going around saying that panic's going to overtake the markets the closer we get to a possible default. And I don't know, the volatility will go up. I don't know if a panic would be the word to use, but that's what he said. So even if it does, and you're a long-term investor, if you have some gains somewhere, go ahead and take them. Ring the register, set that money in cash, and if the markets drop, take a look at some of the things that haven't done so well in your portfolio that you still really like, and buy them at a good value.
So, question for you. So, this is a question posed by Joe Mathis. Thank you for watching the show. And this is also a question that I hear in the news cycles. A lot of people ask this. What about paying the debt down for our national debt? What about paying the debt down?
Oh, yeah. Yeah, we're over 31. Are we over 31 trillion now? It's insane how much debt out there. There's not that much money on the planet, folks, to pay the debt that we've rung up. Now, don't just include us. Look at all of what every European nation's done. China. I mean, every nation runs crazy debt. But, at some point, oh, my God, I would love for whoever runs for office or whoever gets nominations next, the one thing I'm going to be looking for out of a presidential candidate is I don't want to talk about balancing the budget. That'd be great. But I'd love to talk about growing the economy. Let's start getting growth policies in place so that you can actually, cap your spending and start paying down debt. I mean, you can grow your way out of debt if you have good growth policies. So you don't have to have massive, terrible cuts, these, as they call them, draconian or whatever word they like to throw around on the Sunday talk shows. You can have reasonable cuts, or instead of raising, 5% every year what you're spending, raise it 1% or 2% to keep up with the inflation target that we're trying to get. I get that, and you can grow your way out of debt, but yeah, he's right. That has to be a huge focus. Because you cannot carry this much debt. The bigger the debt gets, the harder it is for an economy to grow.
So I have Robert Rockefeller connected with us, and he says debt just gets recycled from one country to the next.
Hey, he's true. And that's a true point as well. And if you look at most of our national debt, who owns most of it? Well, we do. Giant pension funds. People who work at hospitals, and I mean these pension fund managers, they have a ton of U.S. debt in there, so that's most of it. I mean, a lot of people worry about how much China has, but back in the '80s, it was Japan that had a huge chunk, and everybody worried about that. So China has not been buying much of our debt lately because of our issues with China, but he's right. A lot of that gets shuffled around, and you see. And occasionally it pops up in the worst places. Like we saw the currency crisis and the debt crisis back in Europe, quite a few years ago. It was Greece. Portugal, and then Spain had issues, and yeah, it was nasty. So debt can be a terrible thing, but yeah, both those guys who ring in there, they're right, and yeah, but paying down our debt has to be something that's going to be a focus. Otherwise, we're just electing people that are going to run a train right off the rails.
Right. So I have a question for you. Probably the hardest question on this topic. Tell me something good. What's good in this situation?
In this situation, I tell you, I get frothy at the mouth when I start thinking, hey, if we're going to have a recession, and I hate it for people lose jobs, but I always like to. I'm a very positive person. When one door closes, another opens. I've been there with people too and lost jobs, then go find another one. But you always look for something better or try to improve upon yourself, do things to improve your skills. Some people go back to college. Life's too short to sit and worry about all the negative crap all the time. What's good though is if the market did have, it's trading in a range. If we go into a recession, we do see some sell off in the market. I don't recommend people change their long-term strategies, but I do recommend that if you have a little extra cash laying around and you want to leave it there for a rainy day, for when the markets are turning down, that's when you see incredible value be created. As a matter of fact, out of terrible recessions, and even going back to the Great Depression, some of America's great companies were born during those times of hardship. Hardship, for lack of a better, and I know I don't mean to sound mean about this, but sometimes when you go through hard times, it really sharpens the sword a little bit for a lot of people, and you come out better, stronger, leaner, meaner. Companies have to do that or they fail.
Mhm.
And you have during those times, a lot of innovation takes place. So in the next recession, my God, what's going to come out with AI in the next 2 years? I don't know. Some of these companies that are working in it now, somewhere right now, there's some guy in a garage that's, you know, light years ahead of some of these people at these giant companies that are living on cush salaries and paid to do what they do. They may be smart, genius people, but I'll tell you what, when somebody's hungry, they work twice as hard.
They sure do. They sure do.
Um,
I mean, AI is a whole nother show
yeah,
because I think what's going to come out of AI, if I had to just take a guess, regulations. You know.
yeah, and there probably needs to be because AI is a bit scary with what some of this stuff can do. But even if we have a tough summer ahead for consumers, so when I think about it, I try to think about things not like, oh, I have to cut back on this or I have to cut back on that. I hate that word "have to." I like to think, hey, I get to. You know, hey,
Mhm.
even if the summer is kind of lean, hey, you know what? I get to read more books because I might turn Netflix off because I don't want to waste that money every month, or I
Mhm.
might turn my streaming services for a few months until Stranger Things comes back on, right? And then, you know, it's like back in the day when HBO had Sopranos. I turned it off after the Sopranos season. When it came back on, hey, I subscribed again. But yeah, I mean, a lot of positive things can come out of bad times. I don't want people to focus on like woe is me and times are bad. Go find a book, like a top 10 list of books that you should read to better yourself, and read them.
Mhm.
Last time we had the Great Recession, I'll just tell folks this right here. This is not a pretty story, but um, and I'm not going to mention names or get into any details. But I had a investment advisor company prior, and I'd went independent. And after I'd left, I'd worked at a big major company for years, and then I go into business with one of my business partners, same one I'm partners with now to this day. Um, some people have a drive and don't quit, and we're like a couple of those people. We don't quit. There's no
Mhm.
such failure until you quit. Right. So back in the Great Recession, we were in the midst of launching our own mutual fund, our proprietary product, our own mutual fund. And we got it listed. I was listed. You could go online and market watch and punch in the name of the fund and see JC Schweingrouber, fund manager. That was exciting.
Mhm.
Everybody I worked with at that old company is like, dude, you're our hero. You broke out of here. You broke the chains. You went and did your thing. And I thought it was great. Well, the Great Recession hit. Oh, well, a lot of people who promised to put money there did not because they wanted to go put it in somewhere else that ended up going bankrupt locally. So I'd had, a few $1 million promised to come into the fund. Great Recession hit. everybody starts liquidating money out of funds back then.
Mm.
Well, can you imagine what happened? I'm not going to mention names, but there was a couple of attorneys who weren't quite frank with us on the best way to do a mutual fund. Probably cost me and my business partner $250. Large.
Wow.
Yeah.
Mm.
By the time that was done, I was flat busted on my ass. Can you imagine how that felt, right? Leaving
Oh,
the safety of corporate America to do your own thing. You're succeeding. Great recession hits. Nobody's doing anything in equities. The people that promised you stuff backed out at the last minute. And you had a couple of people working with you who took advantage. And now you're flat broke. I've
wow.
been I've been there, and I know how tough that is. But let me tell you, out of those tough times, man, did I learn who I was. And it was hard. I mean, you talk about wanting to be depressed, and I'm just not that kind of a person. Like I don't go live there. And if I'm there for 10 minutes, and my ass is out because I got better things to do, and I want to succeed in life, not wallow in misery.
Right.
Reading a ton of books. And then I took a flyer on writing books for a year. I wrote. A lot of people don't know this, but I write under a pen name. I have 10 books on Amazon. I wrote 10 novels. I said I was going to write one in the course of like everybody wants to write a novel, right? I just didn't stop. So,
Okay.
hey, that's whether I sold a lot of them or not, it wasn't. Who else does that? So I started. You can do things to feel good about yourself and better yourself, and during times like that. And I sharpened the stone. I sharpened the sword. And when the time was right, and we, right back on the horse, because I love this business. I love helping people, and not to toot my own horn, but I'm not too bad at it. Like I might not be the best salesman in the world. Like I can't go out and get tons of business that quick, but I know I'm good at what I do.
Can I ask how long has Vista Front Partners been in operation?
Yeah, we started early 2021,
Okay.
so
Okay.
we're
How's it going?
pretty good. A couple years in, we've been growing. And I've been fortunate enough. Our office is in Frankfort, Kentucky, and I live down in Virginia. So I try to get up there about once a month, except when the weather sucks in the wintertime. And but I'll get up there and meet a lot of people. And so you never know. We might get around to doing our proprietary mutual fund again, because you know what? I'm not done with that. You know, anything worth doing is worth falling on your butt a few times to do it right. And I have enough confidence to step up to the plate and swing again. And I think when hard times, like if we have tough times in the summer or recession comes, I hate for people to lose their jobs, but maybe you were meant for something better.
Sure.
Keep your own self-worth. Don't let losing a job, because folks at a corporate level have to cut back, diminish anybody's self-worth. I've been there.
Yeah.
Um, and you wallow in misery for a little while, but man, put the boots back on, get on the horse, because
That's right.
life's lived and not to be cried about.
Absolutely. So I do have a viewer here, Cameron Brewer. He has a question. Let us know if this is a question that an advisor can really answer, or not. Any great funds you know of at the moment? So this is kind of one of those things where, can you give him free advice on that, or do you need to be a client? Um,
No, I don't mind to steer people in directions. You don't necessarily have to be a client, but I would want to ask a few questions that probably can't really do on the show through a show like this. But one, what is your time frame? And you can have funds that are very well managed that just right now may not be having a great time, because of the market has been trading in a range, and it depends on what you need from that fund. Are you looking for growth and income, or are you looking for income, or do you not need either right now and you're just like looking for high octane growth? And you can, the faster you push that pedal down, the more risk you take. You got to realize that. So I would probably want to talk a little bit with him about those goals and his time frame, and what the money he wants to invest, what's he investing for. So let's get
mhm.
to the investing for and see how much risk we need to take to get there and the time limit. Let me give you just a couple of things here when I look at a mutual fund. I'm pretty picky when it comes to mutual funds. Like I said, I worked at Edward Jones when I first got started, and they had a group of funds that they recommended their brokers sell. 4 or 5 different fund families, and that's what most of them stuck with. So they got their brokers to know maybe 5 or 10 funds, and that's pretty much what they stuck with. Then I worked at Fidelity for a number of years, and I got to know a ton of different mutual funds because Fidelity had tons of them, and of course they lean on you selling their proprietary products, but through there you could also buy any number of other funds. And at Schwab, it's the same thing. There's some proprietary funds at Schwab. They don't have nearly as many as like Fidelity or Vanguard, but they have some proprietary stuff and some ETFs. But they have a lot of other mutual funds that I can buy for my clients through there. And so depending on what I'm looking for, like I'll just give you an example. If I'm looking for, say, a large cap value fund. Now, if you have a Morningstar style map, if you know what that is, and you have, mid cap is the center row. It's like tic-tac-toe. They're like, what was that show? Brady Bunch, right? You had all these kids, right? so the one on the left to the top, right? That's your largest companies that are considered value funds. So let's say I'm looking for funds that fit that category. And value, sometimes some of them may pay dividends, some of them may not, about half and half. So I'll go and I'll look specifically. You can break them down. You can tell the computer when you're on whatever website you're searching that you're looking for that. You can break them down, and I'll look for funds that have been 4 or 5 star rated through Morningstar, and not just this year. I go back 1, 3, 5, and 10 years, and I like to see that they've had a consistent ranking during that time frame. And if they've stayed consistent, good sign. It means there's probably been not a lot of changes at fund management. And I go back and look at who the fund manager is. How long have they been there? What other funds are they on? And how successful have those funds been? So so I kind of break it down. I get under the hood a little bit. Then I take a look at what are the, you can look at a top 10 holding, which is what most prospectuses will show. But I also like to look and see what else is under that hood. Your top 10 holdings may only be 10, 15% of that whole fund. Well, what else is under there? And maybe your top 10 stocks, but what if that fund has 200 stocks in it? What are the other 180? And how are they diversified? Mm-hmm. Are they in telecom, or are they in some like utilities, industrial companies, things like that. So I'll get under the hood and look and see. And then I can kind of tell which sectors have done well this year, if they have a good mixture. If they're way too overweighted in one sector, I may try to avoid that. So just case in point, if I'm looking for large cap value, which I was doing here lately because I like to have a list of go-to funds when clients say, hey, I want to do this. And I'm thinking, okay, a fund in that category would fit with their strategy. So that may be part of their portfolio. And then I'll go look at those funds that I've withered down from 380 funds down to 4 that I like. So I'm incredibly picky when it comes to funds. And you want to make sure also that you look and see what the expense ratios are. Make sure you get a fund that doesn't have a high expense ratio. That'll really eat away at your overall return. But he's welcome to my emails, jc@vistafrontpartners.com. If you want to drop me an email, we'll just chat over Zoom one day and give me an idea of what you're looking at. I can maybe steer you in a certain direction that might be helpful.
Oh, that's awesome. Yeah, I've been defining everything that you're talking about here. So a capped fund is a pooled investment, a fund that has imposed specific maximum limits included on its investing or expense structure. Cap funds will also...
Yeah, I just want to kind of interrupt you there. When I say large cap, I meant large capitalization, like larger companies. So not capping an expense or anything, but capping, like a large cap company would be Microsoft or Exxon.
Got it. Okay. Well, yeah. I'm glad that I started reading that because I was thinking something else. Okay, cool.
Yeah, mid cap or mid capitalization be like your medium sized companies, and then you have small capitalized companies, your smaller ones. So if I'm looking at the S&P 500 index, I'm probably looking at the first like 30, 40 as large cap, and then there's a whole bunch that are mid-size, and then you have smaller ones at the bottom. Because the S&P 500 is broken down by largest to smallest, top 500 companies. So just to give you an idea, am I looking at the top rung of the S&P 500 or the bottom rung? Or not rung by like returns. I mean, just out of that index, the ones that are listed at the bottom, because like the bigger the market cap, like Amazon, for example, it's going to have a bigger piece of the overall pie.
And I have Robert Rockefeller here. He's talking about the real estate investment trusts.
Yes.
Saying REITs are always a good long term.
Yes. Real estate investment. I love those. You have to be picky with some of them right now because there's some real estate issues out there. So again, when you look at a REIT, they pay great dividends. That's one of the things. I have clients who invest just for dividends, and we'll look at those first and foremost because the dividend yields are so high. But you want to make sure, especially if you're looking at a REIT that has a lot of commercial real estate property in it, there might be some risk exposure there where they have to cut their dividend or take losses on some of those. So you want to be careful because REITs, they have to pay out most of their income back to shareholders in the forms of dividends. So that's one of the reasons I love them. But ones that I look at, just to toss out there for him, you can find all kinds of REITs, but you might want to do a little research on some of the medical real estate, those in the medical side of real estate investment trusts.
Interesting. Okay.
Nursing homes, for example,
Yeah.
or types of like rehab hospitals or things like that are part of those portfolios. Those are likely to be around a whole lot longer than some of the retail things, that if we go into a recession and somebody has to close down shop and now you're not getting that income from the rent.
Mm-hmm.
The nursing home is not likely to close down. And, that's sticky money coming in those places, they have a pretty predictable revenue stream, and some of those have some really great dividend yields.
Oh man, that's great.
Just for your research, not recommending anybody go out and buy these, but make sure it fits your portfolio, your strategy, and if you have an advisor, run it by them. But definitely, that's one area you might want to do some homework on too.
Well, fantastic question, Cameron. Thank you so much for watching and asking that question. So to close out the show, we were talking in the green room about who is your greatest rock frontman of all time.
I know. Well, you know what sparked this is I heard on the radio that Aerosmith, they're on their final tour.
Yeah.
It's called Peace Out, right? And one of my favorite bands from the 90s is opening up for them, Black Crowes. I don't know if you remember them, but they're from Atlanta, right? Yeah. So Black Crowes, really good band. She Talks to Angels. Love that song. So they're opening for most of the tour, and they're going to be in Knoxville in January. And I thought, well, tickets are like $89. And I thought, well, I could go, but I don't know what the weather's going to be like in January. It's like 3.5 hours from here to Knoxville. So I thought to myself, Steven Tyler is a great front man. I'm glad I've got to see that band a couple times. Especially when they were a little younger and a little more active on stage. Steven Tyler is not getting any younger. So
he's not.
So I started thinking, who are the greatest frontmen of rock and roll bands of all time? And I went and I wrote I did a podcast on this, on the Gonzo Chronicles. And so I thought, all right, who's the top 10? And I write my top 10 list down. And I come up with some really good ones. But I noticed after that, I went to just do some research online. Did anybody else do a top 10? Or here comes Rolling Stone again. You and I have complained about Rolling Stone. Mm-hmm. Man, they get their lists so backwards sometimes on things. So I look at frontmen, and half of these people are solo artists. Well, I thought frontmen, I think band, right? So like Elvis, great entertainer, but it wasn't like, Elvis and the Rockets, or, you know what I mean? And, or who was another that had on her? Janis Joplin. I'm sure she was a great performer, but it wasn't Janis Joplin and the Roadrunners. And none of this stuff, they didn't have a band. They weren't part of a band. So when you think of frontman, you think of the lead singer of a band.
Yeah.
So I kicked all the solo artists out and I did my top 10. You know who came in at number 7?
Who?
Joan Jett and the Blackhearts. Joan Jett is a front for the band, frontman for the band. I got to see her live. out of my top 10, I've only seen 3 of them live. And Steven Tyler and Aerosmith was one of them. Joan Jett was another. She opened up for Def Leppard
Mm-hmm.
in the 90s. And it was late 90s. I was in grad school at the time, and I went to see them near Roanoke. And what a show she put on. Now, everybody brings their kids there to see Def Leppard, and Joan Jett opens up. And I'm looking around at like people bringing their kids there. I'm like, oh, this was a mistake. Because Leppard's fine. Joan Jett, if you've never seen Joan Jett or seen any of her concerts, oh, you got to earmuff these kids the whole time. She has a sailor's mouth. But let me tell you, I left that concert that night, and like, you know who stuck out? Joan Jett and Blackhearts over Def Leppard.
Okay.
Like, she was great live. Man, was she entertaining. Just as a front for a band, it's like I don't, she had to be in my top 10. I couldn't help it. So I had to. I guess I should change the title of that podcast to "Front People of the Band of All Time." But she cracked in there. And the person I had at number 1, Rolling Stone did not even have in their top 25.
Okay.
And I was like, this is rock and roll sacrilege. What about Diamond David Lee Roth? That guy did so many great albums with Van Halen. And then he had his solo tour also, and he was awesome then. I saw him.
So did you check out Billboard's list? Because they have a different number 1.
Oh, who's number 1 on Billboard?
Bruce Springsteen? Not for me. I'm not a Bruce fan.
I could kind of see that in a way, but it's like he wasn't in my top 10.
But then they have number 2, Freddie Mercury.
I had Freddie Mercury at like 3 or 4.
Freddie Mercury, I would say, is I don't know. I don't agree with this list. They have for number 3 Jimi Hendrix. Okay, Elvis Presley is 4, and Janis Joplin's 5.
Again, solo artist.
Yeah, but. Oh yeah, Joe is agreeing with me. He's like, oh no, not Bruce, but he's saying Joe Elliott. That would be his number 1.
Def Leppard, yeah. So I had I don't know what I did with my list. I thought I had it here somewhere. Actually, hold on, I do because I took notes on this thing right after I did my top 10. I think.
All right, so I'll keep talking about Billboard while you're looking for your list. Number 6 is Paul McCartney. 7, Mick Jagger. 8, Chuck Berry. 9, David Bowie. And 10, Patti Smith. Who the heck is Patti Smith? I don't even know this person.
She had that song "I Am the Warrior" back in the 80s.
Yeah.
But that's all. I know her for 2 or 3 songs. That's about it. She was in a band before that, but I don't. Okay. But again, if I can't remember, it's like I know a lot about music. So here's my top 10, and I had Steven Tyler at 10, and I guess some of these I could wiggle the order around. I had Bono from U2.
Yeah.
At 9. Robert Plant at 8. I mean, how do you leave Led Zeppelin out of that? Joan Jett, and then I had Mick Jagger at 6. Freddie Mercury at 5. Jim Morrison with the Doors at 4.
Mm-hmm.
Which is one of my favorite bands. Roger Daltrey with the Who. And then I sort of broke my solo rule with number 2 because, all those years of Black Sabbath, Ozzy was the man, but then he went solo. But in his solo years, he had so many great bandmates that traveled with him on every album and every tour. They just didn't have a band name. You had Jake E. Lee, who went on to form Badlands later on, a hair metal band that went to number 1 on the charts. Mm-hmm. And then you had the infamous Randy Rhoads and Crazy Train, right? You remember that song?
Yeah.
And traveled with him, toured with him and recorded with him. So I had Ozzy at number 2. Okay, he's a great frontman. And then David Lee Roth at number 1.
Yeah, I like your list better. Definitely Robert Plant. Definitely.
Yeah, because I think he was on the not Billboard, but Rolling Stone in the top 25. But but there are too many solo people on their list of frontmen.
You didn't have Stevie Nicks on there, huh?
I thought about that. Like when I did my podcast, I think I did an honorable mention and did her. But when you mentioned Paul McCartney, who was really the front man of the Beatles? I mean, George did songs. John Lennon did songs.
Right. They all kind of rotated through, didn't they?
Yeah, that's one reason why I didn't put the guy from Kiss on there because
Okay.
sorry Ken Dodge, but I didn't have, but because they rotated around, and it's like, well, who's really the front man? And they're all great in their own right. I mean, this is not to disparage any of those entertainers and great music, but it's like, I
John
like
Bon Jovi.
yeah, I guess he would because he's still rocking to this day.
Yeah, he is.
I had a lot of bands I really liked in the '80s. But I thought about like Vince Neil from Motley Crue because they were such a big band. But then I saw them live, and God, they sucked.
Oh, did they really?
Every time I've seen them, they were horrible.
Did you see
The guy,
the movie?
huh?
Did you see the movie?
Oh yeah, the Dirt. Yeah, interesting. So if anybody gets bored, wants to go listen to that podcast, go look up the Gonzo Chronicles. Elizabeth, you come on there with me often, and we do some fun shows. But I did a little bonus for everybody. I also did the top 10 mullets of the 1980s. Yeah.
I can't even. I can't even. I was still thinking about coming on to your show. I love being a guest on your show. We did one episode with me in the bubble bath. That was fun.
Yeah. Audio people, audio.
Yeah, audio only, but that
no
was
video of that. So, but that was funny. But yeah, it was. Yeah, we've done some fun shows. We did the Dirty Limericks one time.
oh my gosh.
I'm sorry to your mom. She had to hear that.
I know. What would possess my parents to go in there and listen to Dirty Limericks? And
I wouldn't expect
bad.
anybody.
You said, okay, so picture it. It is actually St. Patrick's Day. There was no podcast planned for that day. I'm 3/4 of a bottle of wine in, middle day, right? And we start talking, and you're like, yeah, let's do a podcast on Dirty Limericks. I'm like, give me 10 minutes, I'll write a bunch. So I wrote them, and I was way outside the box.
That was hilarious. You came, you brought the house. You stole that show, man. I had nothing on those limericks. Those were
Whoa, yeah.
But anyway, St. Patty's will be back around again sometime.
That's right.
I'll have my Guinness. You have
I love my Riesling. I love it.
But we'll do another podcast here soon. There's so much to talk. I haven't done one in a month because my voice was. That's why I haven't been on your show. My voice was shot. I sounded like I was in puberty and just felt like I would have rather been kicked in the nuts than have gone through that. Like, it's just so. We're back. I'm back. So I have a bunch of podcasts to catch up on. I got a lot of stuff to rant about. A lot's happened over the last month.
All right, so I'm going to put this out here. So, how do you spell Riesling? You're German. How do you spell it? Oh,
Riesling.
Yeah.
Reiling, I think.
All right, I'm gonna go with that. So, what is your drink of choice?
If I had my choice, I'd have Sierra Nevada Pale Ale.
Oh, nice.
That's near the top of the list. And if you want to get a little darker, there's Fat Tire. That's pretty good. My friends will call me a beer snob, but I got tired of drinking swill. If I'm gonna have a beer, I'm gonna have a good beer. I'm not gonna go pay $5, $6 for a 6-pack. I go get a 6-pack of bottles. It's usually like $13, $14 at least. So,
what about a mixed drink?
Screwdrivers. I'm kind of basic.
Really?
Yeah. I do like a little gin and ginger ale. Or Scotch and ginger ale, I mean.
Yeah.
Chivas Regal. Now, the funny thing is, folks, don't get jealous, but where my office is at in Frankfurt, I'm right down the road from the Buffalo Trace Distillery. And not much further down the road is Woodford Reserve.
Yeah, I think we may have to do a live show. How fun would that be?
From the distillery?
Yes. 100%.
They do tours.
All right, we have to set that up. We got to do that. Joe Mathis is saying Disaronno Amaretto, neat for him.
Nice choices.
Yeah. Oh, Taylor Port. Man, I haven't had port since I was in Ireland.
I don't think I've ever had that.
Wow. Yeah, it was. Woo, that's a throwback. Well, cool. Very classy. All right. Well, thank you so much. Tell us one more time, how can we get in touch with you if anyone would like to talk a little financial business with you?
Yeah, drop me an email. It's jc@vistafrontpartners.com. Or you can go online at vistafrontpartners.com. There's a little contact us button there, and you can just type in what you need and leave me your contact info. I'll get up with you. I do. I work with people. Like, I know a lot of people work and they have to have flexible hours. Thankfully, I work most of the time from home, and then part of the time at my office in Frankfurt. So we'll work with you for whatever time is best you need to talk. I like to Zoom with people because I like to see who I'm talking to, and but if you don't have that option, we'll just chat on the phone. Doesn't cost a dime to have a conversation. So let's, if you have something you're concerned about in your portfolio, or, um, you know, have some concerns going forward, or whatever you need to talk about, just give us a call. We'll chat, and if we can help, we'll be glad to.
Oh, that's awesome. Thank you so much for your time. You're always gifting us so much education and information, and I can't thank you enough. So thank you so much for coming on to the show tonight.
You're very welcome. And if like, just a heads up, Andre Agassi did have one of the most impressive mullets of the '80s. You remember the tennis player?
Do. I loved watching him. Even though I was a kid, I'd watch him because I knew that I could read his lips of all the bad words that he was saying.
Yeah. Here's a little tidbit for you. Is Ken Dodge watching by chance? Do we
I
know?
don't think so. No, I haven't seen Ken.
Oh, well, here's some music trivia for anybody that never really knew this. Do you remember "Total Eclipse of the Heart"?
Yes.
Bonnie Tyler, right? Great song. One of the best songs coming out of the '80s. Love that song.
Yeah.
Go back and read the lyrics. A lot of people don't realize this. That song's not about some cute little love story. That song's about vampirism. Go back and read the lyrics.
Really?
Yeah, her life starts again tonight. She's going to be bit by a vampire. Read the lyrics.
Oh, cool. Okay. All right, great. We're all gonna go do that. Thank you so much.
Well, ladies trivia, everybody. Hey, hopefully it's been, and I look forward to coming back. So thanks everybody for the questions you had, and hope it helped.
Absolutely. Thank you, JC. We'll see you again soon.
Bye.
Bye. Everybody, thank you so much for commenting and being engaged. I just absolutely love you. We are blessed. You are blessed. Mwah. I love you, and stay tuned for another great show coming up next.